Hello grade 11s. Today we're on page 360 of your textbook. We're going to talk about recording cost of sales. So a trading enterprise, when it sells goods, this is the work you did in grade 10, sell something, then either bank or debtors control is increased on the debit side by an amount, and then sales account is credited with the selling price. Then the cost of sales account is debited with the cost price of the goods, and the trading stock account is credited. Because trading stock is an asset, it decreases on the credit side, while cost of sales is an expense that is debited on the debit side. So this is not new, this is what you've done in grade 10 and the early parts of grade 11. But what now start ring a bell is that this is a company that trades trading stock. But now what about a company that manufactures its own trading stock, which we've been doing up till now? And now when this company sells its trading stock, what does it look like? So the nice part is the first part is exactly the same. You've got your bank or debtors control increasing on the debit side, while sales, income on the credit side. So now you can think of this two ways. You can remember that cost of sales is always an expense with an amount on the debit side, and then finished goods. Because if you think about the manufacturing process, when the goods are finished, they are trading stock. Work in progress cannot be sold yet, raw materials cannot be sold yet. When a good is finished, it can be sold, and that good is an asset. So the same as trading stock decreases on the credit side. Now, if you go to page 360, you'll see that finished goods has a balance of 77,000. That's 60,000. We're going to quickly calculate that, show you how the calculation goes in the next bit, but don't worry about that yet. Remember that finished goods, that's 60,000 in the red, is now goes to cost of sales. So at the end of the month, or at the end of the period, you have finished goods left with a balance of 17,000. Remember, finished goods so you need to pay attention moving forward. So in this example, which continued from the previous example, the 77,000 came from work in progress. You sold 60,000 of that. That was the cost price, the cost of sales. And now all of a sudden the name cost of sales should become clearer, because this is what it cost you to make the trading stock. So you still now have 17,000 rands worth of finished goods that can be sold in the next month or period. So your selling price was 120,000. Your fixed markup on 100% on cost price was 100. So you must be able to work out that the cost price is 60,000. So you can remember here the cost price is 100. The margin, the markup is 100 on the cost price. So if you work it back, then the cost price is 60,000. Thank you, gentlemen.